Hello everyone, how are you all? So welcome to the Office of Sarah 24/7 and I'm here with all of you to discuss the another session on the principles and practices of banking. As you can see that this is our second class, so we have started a proper series in which we are discussing unit-wise topic in certain comprehensive way so that you will be having a certain idea what to study in a particular unit or what not to. So in the first session we have taken the banker-customer relationship in which we have first understood the concepts, the different types of relationship between a banker and a customer, and then we have practiced a certain number of questions on the same topic. So in today's session, the same concept we are going to follow, the same way we are going to follow, in which we are going to discuss the second unit of your PPB, and the second unit of your PPB is what? It is your AML KYC guidelines. So if I talk about this particular topic, AML KYC guideline, this is a huge topic. So we have to complete it in a certain parts, and apart from that, why it is a huge topic? Because a lot of guidelines are there, in each and every cases. As an individual, what are the guidelines? As a corporate, what are the guidelines? As a partnership firm, what are the guidelines? Let's say as a Hindu undivided family business is there. So in that situation, what are the guidelines? So guidelines have been given as per the different types of customers also. So that's what we have to cover in this particular unit. That is the second unit of your module A of PPB. If I talk about the module A of PPB, A and B both are the modules which cover 60% of syllabus of your paper. And this 60% syllabus of your paper also covers a 60% weightage in your paper also. So do make sure first when you are starting preparation for the PPB exam or the PPB paper, start with the module A and B because they cover the maximum weightage of the paper, and then go with the C and D. Okay, so let's start the session without wasting other time. So first of all, if you haven't subscribed the channel yet, do subscribe the channel. And also I request to all of you, share the session with your friends and colleagues who are going to give the JAIIB October exam. So let's start the session. In this particular session, we are going to discuss the AML KYC guidelines. So I am your mentor Amanjot Kaur. I will be taking your PPB and Indian Economy, Indian Financial System subject for the JAIIB exam. Okay, so let's start. So I will be dividing this particular unit in the parts. So in today's session, what we are going to discuss? We are going to discuss the two important things that is related to this chapter. And what are those things? That is related to money laundering. Before understanding the guidelines, okay, about AML KYC, first we are going to understand what was the reason because of which all these guidelines was introduced. So the money laundering and financing of terrorism. That's what we are going to discuss today in detail, because these are the two major reasons because of which all these guidelines has been seen in the banking system, right? If I'm talking about money laundering and terrorism financing, financing of terrorism, these two are the reasons why we have so many guidelines and we want so many documentations from the customer before providing them or before making them our customer. It means bank asks for a certain details, bank asks for a certain proof in the form of your important document that is known as officially valid documents, so that whenever you are starting a certain relationship with any customer, you know about that customer. You know that the customer do not have any criminal record. The customer is not fraud or default or any other thing that is related to money laundering or the financing of terrorism. So that's why the KYC AML guidelines has been introduced. And these guidelines are not only in India, it is in every country. And at international level, Financial Action Task Force, I hope you all have heard about the name of FATF. That's stand for Financial Action Task Force. FATF also makes certain guidelines, certain rules for controlling the money laundering and financing of terrorism. So all of you might know about this, that FATF also divide the countries in a list. List of what? The gray list, the black list of the countries. Those countries who do not follow the regulations of the FATF or the guidelines of the FATF, those particular countries will be listed as a gray list and a black list in the FATF. Now after that what? After that, if you do not follow the rules, if you do not continue the rules, it means it will be hard for you to again participate in the international financial system. If country is in the grey list, it means FATF has given the warning to the country that you have to stop this particular thing because it is related to money laundering or either with the financing of terrorism. And the second thing, if you do not control that activities, then you will be blacklisted. And once you are blacklisted, it means you cannot enter or you cannot participate in the what we can say in the international financial system. So this is how the FATF works to control these two things at the international level. The same thing RBI does as the central bank of the country. RBI is the apex bank of the country. RBI is the central monetary authority of the country. So same thing RBI does here by introducing the AML KYC guidelines. Same thing government is also promoting by providing the Prevention of Money Laundering Act. Okay, so that's what we are going to discuss today. So let's start with the money laundering and then we will go with the financing of terrorism. So theory we are going to read in the end. First, we are going to understand what actually these terminologies are. Okay, so first of all, let's talk about money laundering. So what is money laundering? As you can say, the name says money laundering. So what it do? It convert, or we can say it clean the black money or dirty money, you can say. So money laundering name has been given to this particular activity when in the USA it has been seen that a certain person who was earning money with the illegal sources of income, he used to have a laundry system at their particular country. As we know, in India, there is no such kind of system that you cannot wash your clothes at the public place or somewhere else. But in foreign country, this is a rule. You will have a proper laundry room. There you can go and you can wash your clothes. So similarly, what he did, he invested his money in that particular laundry room services. And that's how he made his black money white money. It means the illegal money he used to earn, that was converted into the legal money with the help of that laundry system. And that's how the name has been given as a money laundering. Because what you are doing, you are cleaning the dirty money of the people. That's the term. What is money laundering? Okay, so what is money laundering? Simply when you convert the black money, into white money, that is known as money laundering. It means conversion you are doing. So conversion of black money into white money is known as money laundering. Now, what is black money means? Black money means the money that has been earned with the illegal activity, with the wrong way, or kind of source of income which you cannot tell to the government because that's not legal. So those sources of income which is illegal, or we can say the sources of income which are not a part of the legal system, those income will be known as black money. And when you convert that money into the legal system, or a kind of money for which you can give the legal source of income, that process is known as money laundering. And this will be done in the 3 stages. Okay, and those stages are: first, okay, so the first stage we have placement. The second stage we have layering. And the third stage we have integration. So these are the 3 stages in which we are talking about your stages of money laundering. Okay, these are the 3 stages. So placement, layering and integration are the 3 stages of your money laundering. So let's have a idea of money laundering as a theory. Let's read the theory and then we will be understanding what are these stages. So this is what module A, and we are going to discuss the AML KYC guidelines here. Okay, so you can see here money laundering and financing of terrorism is the first part of this particular unit. As I have told you, this is a very huge unit. So you can see here, first of all, if we talk about money laundering is a process whereby the origin of funds generated from criminal activities, that can be drug trafficking, gun smuggling, corruption, etc., is concealed, and these funds are infused in the financial system, appearing as if these originated from legitimate source. So how you convert that money into the legal money? By sending that money or by entering that money into the legal financial system. So that's what we are saying. Money laundering is simply a process where the origin of funds that has been generated from the criminal activity, and these are the examples of criminal activities. Okay, and when you convert these criminal activity fund, or I can say when you enter these funds in what? in the financial system. That's a legal financial system, है ना? To make that income, to make that money, that it has been originated from a legitimate source. It means from the legal source. That will be known as your what? Money laundering. So this is the money laundering we're talking about. Okay. So often such funds are deployed in legal activities or in legitimate assets. So how I will be making the black money into white money? Obviously by showing that this is the money that I have generated from the legal source of income. So when I'm talking about a legal source of income, it's very obvious. I have to give certain proof for that. Like, yes, this is my legal money, and from where I have earned it? From a certain legal financial system. And that's where the 3 stages of money laundering works, that is placement, layering and integration. Okay. Now next, corruption, tax evasion, Ponzi scheme, other financial crimes, cyber crimes are closely connected with the money laundering. So I hope you know the corruption means what. It's very obvious. Everybody knows what is corruption. Tax evasion, it means you are not paying taxes. Like you have a certain liability of a tax, but you are not paying taxes. You are hiding that particular income from government so that you do not have to pay the taxes, right? Then Ponzi scheme is kind of a fraud scheme. The certain kind of a scheme that's not a legal scheme, but somehow a kind of investment scheme that gives you the high return investments and a high investment returns. Like it shows you, like for example, I can say I have invested in a certain kind of a scheme, and that scheme is saying we will double your money in 15 days. That's kind of a scheme. Like the attractive investment schemes are the Ponzi schemes. Okay, so all this will be part of your money laundering. So funds from these crimes now from substantial and a portion of money laundering funds. So financial crimes now constitute a significant part of the criminal activities. Hana, they are what now? They are the part of criminal activities now. So third component of the triad today is terrorism financing. So we have money laundering, we have financial crimes, now we have terrorist financing also. So these are the 3 ways by which people are trying to convert their black money into white money. And why in the banking sector we have to study that? Why we are studying financing of terrorism in the banking system? Why we are studying conversion of black money into white money in the banking system? Or let's say in your syllabus, in your JAIIB paper, why we are studying that? Because the source by which they convert black money into white money, that is banking system. Okay, so there are so many terrorist outlets are there, or they use the banking system to transfer their fund from one place to another place by using the bank accounts or any other service of a bank. So that's why that's a part of your syllabus, because people are using, like why banking system was introduced, why the legal financial system was introduced, not only in India but also in world. The reason was we wanted to provide the disadvantaged population of our country a solution. Solution of what? To have a regular income in the form of interest. Solution of what? Solution to make, to stop the exploitation of those people from the money lenders, mahajans and other persons, right? Zamidars and all. Because they used to charge high rate of interest on the loan. So we wanted to provide them the certain financial product and services that will be affordable at a very minimum cost. But it will be helping them to increase their income. It will be helping them to raise their investment returns. Okay, that's why we have introduced the banking system. So, and that's why I am using the banking system. I am using the banking system just to have a bank account to earn interest on my deposits, to have a loan from the bank whenever I need, to have a FD in the bank, to have a certain, let's say, savings in a bank. That's why I am using the banking system. But that's why you guys are also using the banking system. But there are certain people who are using these kind of services that is provided by bank for the criminal activities. That can be money laundering, that can be terrorism financing, that can be any financial crimes like the cyber crime and etc. Okay, and that's why we have to study this. So with growth of several terrorist organizations, big and small, terrorist financing has assumed large proportions. So terrorist financing has developed linkage with money laundering, as for both purposes similar modalities are used. For the money laundering, you are using banking system. For the terrorism financing, you are using banking system. That's why they are related. So now you can see money laundering, terrorism financing, financial crimes, they all are interconnected. Like in Indian economy, Indian financial system, module D, we have a chapter of market interconnectedness. Money market is related to capital market is related to the derivative market. They are interrelated, right? They are related to the government security markets also. Similarly, money laundering, terrorism financing, and financial crimes like the cyber crime and all, these are all related. Now, another aspect is that the certain crimes have organized into organized crime groups and professional money launderers. So that's how they have been converted. And now, before going with the Financial Action Task Force, we are going to understand what are these stages. So let's say, for example, I have a black money. Let's take an example. I have a black money of 10 crores, for example. Okay, I have a black money of 10 crores. This is my black money. Now, I want to convert this black money into white money. What I have to do, first of all, this is the illegal source of money now. First of all, I have to include, or I have to enter this illegal money into the legal financial system. So that I will be doing with the help of placement. In placement, what will I do? I will enter illegal money into legal financial system. Or in simple language, I can say that simply by opening a certain bank account, by depositing your money in a bank, you are having a placement. You enter the illegal money into the legal market. That's the placement. Now, the second stage we have, that is layering. Okay, second stage we have, that is layering. Now, if I deposited my money in the bank, like it's very obvious, I will not deposit the whole amount of money in a single bank account. It's not like I have deposited 10 crore rupees in XYZ bank. Obviously, there will be an anti-money laundering officer. He's going to ask me to show the source of income, and I don't have source of income. So I will be distributing my deposit, distributing my amount in the different banks deposits. That's what I'm doing in the placement. But now, entering the illegal money into the financial system, having the bank account, depositing certain money in the bank account, it's not the solution of converting the black money to the white money. Because still, if someone asks, where did you get this particular deposit? Where did you get this particular amount of money that you have deposited in the XYZ bank? Still, I don't have. What I don't have? I don't have a legal source of income. So that money is still what? Illegal money. Right? That money is still what? That's a illegal money. Clear? Now we have a layering. Now what is layering? Layering is simply when you create a complex network of transaction. When you create a complex network of transaction. That's a layering. Now, why I'm creating a complex network of transaction? What does it mean? Why I need to create a complex network of transaction, and why do I create this? See, the reason is simply, if I have deposited the money in the bank account, if I let that money remain in the bank account, I won't be able to have a certain source of income to show that this is the source of income from where I have earned this money, obviously, right? So what I have to do first, I have to find a legal source of income of earning. So that's why I'm creating a complex network of transaction. Now, what does this mean? It means whatever money I have deposited into A bank, B bank, C bank or D bank, I will have that money, I will withdraw a certain amount of money from there, and then I will be investing that money. I will invest that money in the diversified sector, in the different sectors, so that it will not easily be identified by government. So I invested a certain amount of money in the share market. I invested certain amount of money in derivative market. I invested a certain amount of money in commodity market, let's say. I invested a certain amount of money in real estate. I invested a certain amount of money in gold. I have a certain FD in a bank. I have a certain insurance policy. So I have created a complex network of transaction, so that the whole amount of money, whatever I have, that will not be easily identified. If I invested whole 10 crore rupees in the share market, it can be easily identified. And the government will next day will come to me and asking for a source of earning. So that's why that's not what I can do here. And so if I want to convert my black money into white money, what I'm doing, I'm creating a complex network of transaction. But after creating a complex network of transaction, still I don't have answer. If government asks me whatever money you have invested in the share market, I don't have answer because I do not know how to show that particular source of income. I have invested that money, but from where I have earned that money, I have no source for that. So that's why we have to go to the third stage, and that is integration. That is integration. Now, what is integration? Integration simply means when you create your own assets. And now what you are doing, you are creating your own assets. Let's say, for example, I bought a bungalow, I started a business, I bought a luxurious car or something else. That's my personal asset. So I converted that amount of investment into the personal asset. Now, if government asks me, now what the government or public will see? They will see that this person have a bungalow. This person have a luxurious car. This is the only person in the city who have, let's say, for example, BMW or Mercedes or Audi or whatever. So now if they ask me from where you have earned, from where you have purchased this car, from where you got the money to purchase this car, I can say that I have done the investment, and that investment given me the return of 10%, 20%, 15%, whatever the amount is. And from there, I have earned the money. And that's how I purchase my home. That's how I purchase my, let's say what, the luxurious car or whatever I have created an asset. So that's how the money will be converted. So whatever assets you have created in the integration, you have a source of income from the layering stage for that. And this is what the money laundering is known as. I hope it's clear to all of you. So these are the 3 stages of money laundering that we have discussed. So you can see here. So stages of money laundering first talks about placement. In this stage, the funds from the criminal activity are introduced into the financial system. So typically this is done through deposits in multiple bank accounts, that what I have told you. I am entering my black money by depositing the money in the multiple banks. Okay, second, layering. Next, those funds are passed through numerous financial transactions in these accounts, creating several layers of fund transfers. This helps in hiding the source of these funds. So what you can do the multiple transactions. Like I have had a bank account in a bank. From there, I transferred that money to Mr. Ravi. From Mr. Ravi to I transferred the money Mrs. Yogita. From Mrs. Yogita to I have transferred the money Mr. Ram, then Mr. Raju, and then Mr. X or Y, whatever the names are. And then I got that money back. So you can create a complex network of transactions in the bank also by transferring the money. That's the layering. So you have to create what? You have to create a complex network of transaction. The several layers of transactions you have to create so that it will not be easily identified from where the money came and from where money goes. Now integration. Next step is collecting the funds. One second. Collecting the funds lying in the multiple accounts in one or few accounts that are then deployed for investing in some legal business activity or acquiring some assets in the legitimate manner. Then that money which you have invested or transferred in a bank account, you can collect that money and you can start your legal business activity, or you can have whatever assets you want to purchase, you can invest that money in those assets. So this is how the money laundering works. Okay, this is how this is how the money laundering works. I hope it is clear to each and every one of you. Let me know, is it clear to all of you? So this is what the money laundering is. Okay, now what are the objectives of preventing of money laundering? First, the main objective of measure for preventing of money launderings are, first, to prevent the criminal elements from using the financial system for money laundering activities. Criminal elements means those people who are using the bank account, the financial system, with the wrong intentions. What are the wrong intentions? To convert their black money into white money. To stop them, we have this money laundering to not have this happen. Now, to prevent the spread of criminal activities in the society, if you do not stop 1 or 2 people, the thousands of people, the lakhs of people will start doing that. So we want to stop that. Then, to safeguard the economy from financial crime. We want to save the economy from the financial crimes, that is cybercrime and all, to prevent terrorists from gaining access to the financial resources. Okay. Also, if you stop this thing happening, these things to happen, now terrorists will not be able to transfer the money from one place to the another place. And they won't be having a overall fund that is required to them to perform their terrorism activity. Okay, so you can stop terrorism also by using this method. Okay, now Financial Action Task Force. So what is this? This is a global organization and it was set up for what purpose? Evolving the measures to be taken by financial sector businesses and certain non-financial businesses and professions for prevention of money laundering. So FATF issued certain recommendation that serves as anti-money laundering and combating financing of terrorism and are known as FATF Standard 2010. So money laundering and terrorism financing are considered as criminal activities across the world. So not only India, every country know these two activities as a criminal activity. Okay, so these are the criminal activity, and that's why FATF also have given us a certain, what we can say, standards here. Okay, so this is what the FATF is doing. So do remember, FATF creates international regulations to stop the money laundering and criminal activities or terrorism financing. Okay, now what's the impact? Like if I have told you, FATF has provided a certain two list, that is grey list and your blacklist. If the country is blacklist, it means that country will not be able to participate in the international financial system. It means what? It means no country will be giving you the loan, and no international organization like World Bank, IMF, ADB, NDB, they are not going to give you money. So if you have been blacklisted, in that situation you are on your own. No resources for financial fund will be available to you. Okay, until and unless you comes out from the blacklist. Okay, and in the grey list you have only be given as a, let's say, what can I say, warning. The FATF has given you the warning. Okay, so that's what the FATF is. So whatever guidelines FATF is giving at international level, that has to be fulfilled by each and every country, and the countries who are the member. And apart from those, RBI also give us the AML KYC guidelines, and that we also have to follow. Let's say, for example, a certain customer is there, XYZ person, or Mr. X is there. He is India citizen. He is living abroad and he want to open an account in a foreign country, in that particular country wherever he is living. So what happens? So that person's identity first have to be checked. And let's say, for example, I'm living in India and I'm having fund transfer services with the help of bank to a certain kind of country. Let's say I'm having the fund transfer to Japan. I'm having a fund transfer to Israel. I'm having a fund transfer to, let's say, Iraq. In that situation, when I am doing this fund transfer, this is the important thing that have to be done by the bank before transferring the fund, to know that that particular country is blacklisted or grey listed or not. Apart from that, you have to cross check that FATF has said this country is following the regulations or not, because FATF also tells us that if the country, let's say for example Israel, is following FATF's rules but not fully, a little bit rule it is following, so it means it's still there is a risk. So FATF will say you will not be allowed to transact with this particular country. And if you want to do that, because it's related to the trade, or it is related to, let's say, whatever trade relations you have with that country, you can do that. But first have a KYC. And if you are dealing with a particular bank in that country, first you have to know about that particular bank's credit history also. So these regulations, not only in India, at the world level, we are using to control the money laundering and terrorism financing. That's given by FATF. And in India, what the banks have to follow here, that is given by RBI. Okay, now, stages of financing of terrorism. So there are numerous terrorist outfits in the world. So these have financial cycles similar to commercial entities and use banks and financial institutions. For what purpose? So to transfer funds from one place to another. Because it's very obvious now. Like if you have seen movies, like Akshay Kumar's movies there, or so many movies are there in which we have a certain idea like how this terrorist outfits are working. So they send their people to the different cities in a country, or to the different countries. And they used to contact with each other. They used to live in that particular city or country for a certain period of time, and then they will plan to have a certain attack or something. So wherever they are going, wherever they are living, obviously they need a fund to plan this. They need a fund to have weapons and something, whatever they are required to fulfill their task of terrorism. So what they are doing, they are having a life as a regular people like us. They are having a bank account, they are having a job, they are having a family in the particular city and all. So you can't identify these kind of people. So what they are doing, they are using the bank account just like us, we are using. So but they use or they have that fund of money that they are going to use for the terrorism activity. Now it's not easy to identify. So what you have to do, you have to check the sources of funds they are getting from there. Let's say I'm getting fund from XYZ country, and I know that country has a very bad image in the world because of the terrorism. So it's very obvious if that transaction is happening with that particular country, it's the responsibility of the bank to cross check what are the transaction, what are the sequence of the transaction, what are the value and volume of the transaction, and then inform to RBI. That's a suspicious transaction because that have to be informed to the financial intelligence unit as well as to the RBI. That's what we're talking about here. So this is what the terrorism outfits are doing, or terrorist outfits are doing, and we want to stop them. And that's why this stages has been defined, and then the money laundering has been introduced. So it has 4 stages: raising, moving, storing, and using. What first is raising, second is moving, third is storing, and fourth is using. Now you can understand by the name only. It's raising. So first you have to raise money. Obviously, you need a money. You are not a person who is working, or you are a billionaire that you have a money and you will use that in the terrorist activity. Obviously, no. So you have to raise money. So that money you will be raising. From where you can raise that money? Obviously, by taking a sympathy of people. So I am coming on YouTube. Let's say, for example, I am saying that this country, or this person, or this caste, or whatever religion is, they have done bad with me. Or they have done bad with my people also. So I'm gaining the sympathy, and when the people have sympathy with me, they are going to send me the funds. So that's how you are raising the capital. Then moving. So from wherever you are raising money, you have to move that money where at those locations where you are sending your people to perform the task. So you have to move that money. Then storing. In that particular location you have moved, it means you have transferred that money. Then you have to store there in a bank account or whatever financial institution you have, because not immediately you are using that money. Now you are going to use after 6 months, or let's say after 2 months, or after 1 year, or maybe after 6 years. So you have to store money that there, and then whenever the times comes, you use that money by withdrawing from the bank. And this is how the financing of terrorism used to be done, or it is still doing. So first is raising. Terrorist organizations source funds from their sympathizers, both individuals and organizations. So some terrorist outfits also engage in the various income generating activities like legal or criminal. Channeling funds from both such sources is done in a clandestine manner, so that the purpose for which these are collected is not known. So they are doing what? They can get the fund from the sympathy. They can get fund by generating the income from legal or criminal activity. Like they are working as a normal person in a country. They are working in, let's say, a certain country company in India. So they are earning a legal money there. They are paying taxes and they are doing everything. So you can't be having a doubt on them. Now, moving. Contributors to the terrorist organization can be located anywhere, not only in their home country, but across the world. So these funds are therefore required to be moved to the places of their establishment of the terrorist organization. So that's what the moving means. You are moving to the location wherever you have the persons or terrorist organizations. Now, third is, one second, this is moving. Now the third is storing. As the funds raised may be deployed for terrorism and related activities, including the regular activities for running the outfit with a gap or time and spread over period, these are parked in the interim in the bank accounts or any other financial investment. So now you are storing whatever the fund was, you have transferred, you have moved that fund from one location to another. Now you have to deploy that money for the terrorism, but not immediately. somehow you are going to use a little bit of money from the accounts, and you can use that. So first of all, you have to store that money in a certain bank account or a certain financial investment. Then the fourth one, institution, है ना? Then the fourth one is using. Finally, the raised funds are used for the purpose of carrying out the Terrorism Act for various organizational related activities. So raising, moving, storing, and using. These are the 4 stages of your financing of terrorism. So do remember how money laundering will be done or can be done, Hana, to convert your black money into white money, and how the financing of terrorism has been done. Hana? So to stop this, and for all these activity, they are using what? They are using the banks and financial institution. So to stop those criminal activities from the banking system, financial system, we have introduced these fines, Hana, money laundering. So measures to mitigate the money laundering risk is, first, to know, understand the customers and their financial dealings better. Hana, you have to understand your customer, you have to understand their financial dealings. It means that's why we have a principal officer in a bank. That's why we have an anti-money laundering officer, to know from where the money is coming and from where the money is going. So if the principal officer have a suspicion on a particular transaction in a certain particular account, so that will be informed immediately to the within the 7 days to the financial intelligence unit. It will be informed to the RBI also. Then it will be in the process that you are checking the past transactions also. So this has to be done. Then to detect and report suspicious activity to FIU-IND, that I have told you, Hana. You have to inform to FIU-IND. What is FIU-IND? Financial Intelligence Unit, India. So you have to detect and report the suspicious transaction to that unit, Hana, and this will be done by the principal officer of a bank. Now, to compile with applicable laws and regulatory guidelines, you have to follow AML KYC guidelines. It's not like RBI, you have also heard about it, like RBI charged a certain penalty to a particular bank because he was not following the KYC guidelines, right? So this is what we're talking about here. Next, to adequately train the staff in KYC AML procedure, obviously, all the time you have to make sure you're providing training to your staff. Like what are the rules, what have to be changed, what update has been seen, what are the methods by which you can use these guidelines to stop this money laundering and etc. So these make it difficult for criminals to abuse banks for money laundering and financing of terrorism, as their activities are closely monitored. When you are closely monitoring a particular person's account, it's very hard to perform these activities. Okay, so they mitigate the money laundering, financing of terrorism risk, as criminals would avoid vigilant banks. Okay, so they do what? They mitigate the money laundering and financing of terrorism risk, as the criminal would avoid vigilant banks. So this is what we have talked about, the money laundering and financing of terrorism. This is the first part of your Unit 2. I hope it's clear. If it's not, if you still have any doubt in particular topic, then do let me know in the comment section. I will be checking your comment and answering there. Okay, so let's start. Now, let's practice a certain question. Those who are watching us recorded also, you can also ask your doubts in the comment section. I will be checking the comment of that also. And if you are watching the recorded session also, let me know in the comment section how many answers you have given correct. Okay. And those who are already live here, you have to answer the question. Now, the question is saying objective of KYC is or are. KYC is what? Know your customer. First, to ensure appropriate customer identification, to monitor transaction of suspicious nature, to ensure that the customer would not deceive the bank, to ensure if loan is given, it would not become a NPA, and only A and B. So you have to tell the objective of KYC, know your customer. So KYC is simply a process in which what we are doing, in which we are trying to make it possible for the customer, or for the bank to identify each other. So KYC simply is a process by which you try to identify, you try to know about your customer so that you know the history of the customer. Okay. And for that you use a certain officially valid documents. So the answer here is, if I talk about to ensure that the customer would not deceive the bank, no. If I say to ensure if loan is given, it would not become NPA, no. If I say to monitor the transaction of suspicious nature, yes. If I say to ensure appropriate customer identification, obviously, so the right answer will be E option. Both A and B. Okay, now, which of the following is not the stage of financing of terrorism? So I have told you there are 4 stages: raising, moving, storing, and allocating. So out of these 4, which of the following is not the stage of financing of terrorism? Also, let me know what is the other stage of the financing of terrorism. Out of these 4, 3 are correct. Then let me know what is the 4th one. Raising, moving, storing, allocating. Okay, so right answer is allocating. Allocating is not the part. Raising, moving, storing, and the 4th one is using. The 4th one is what? Using. Okay, next. Now, consider the following statements regarding objective of measures for prevention of money laundering are which of the following statement is incorrect. You have to answer. First, to prevent criminal elements from using the financial system for money laundering activity. Second, spread of criminal activities in society. Third, to safeguard the economy from financial crime. Fourth, to prevent terrorists from gaining access to financial resources. And then you have to answer only 1, only 2, only 3 and 4, and only 1, 2 and 4. So out of this, you have to tell which of the following statement is incorrect regarding what? Objectives of measures for prevention of money laundering. Let me know. A, B, C, or D. Which of the following is not a part of the objective of measures for prevention of money laundering? So the right answer here will be our only second, because obviously spread of criminal activities, no, this is not our objective. The right answer will be your second. Okay, next question is saying which of the following is not the stage of money laundering? Not a stage of money laundering. First we have raising, second placement, third layering, fourth integration. So it's very simple, it's very obvious. Raising, because it's a stage of your financing of terrorism. Raising, then moving, then storing, and then using. Okay, now next, customers are typically categorized in dash risk category. Acha, अब now on the basis of KYC, है ना, like what kind of risk can be seen from the customer, can occur in the banking system. We have divided the customer into a certain category, that is low, medium, and high. On the same basis, we have what? We have a periodic updation of KYC. So which of the following is correct? The right answer is 3. Okay, and the periodic updation duration I will tell you when we are going to cover the KYC AML guidelines now in the next chapter. Okay, so this is what money laundering and financing of terrorism means, and the stages. These are very important topics, do remember, because maximum questions has been seen from this particular both the topics in the May 2023 paper. Now, more than that, to know, you can go and join the Mahapack 2.0 that will be covering in detail, है ना? Complete syllabus will be covered in detail in the Mahapack 2.0, so that you can join. How to join, I will let you know. So before that, you can see this is your English medium session timing. So do make sure you check these timing for Monday to Saturday sessions. Okay, and Sunday we have a special session. That announcement will be done on Saturday only. Okay, now how to enroll? First of all, do download the Adda 24/7 application if you haven't done it yet. So do download the application. After downloading the application, what you can do, go to the JAIIB CIB section here. Okay, click on the JAIIB CIB section here. Then you can go to do the JAIIB October 2023 or Mahapack for here. Now, if you want to go with the individual batch, you can see the third batch has been latestly started. That is third Sankalp batch from 24th of July, in which the retail banking already started. The PPB and Indian economy will start on 4th of August, and then the AFM will start. How to enroll? Just click on the buy now option, and you can see July 77 is the offer that is going on right now, in which you will get 77% discount. For 1% additional discount, you can use the coins available in your application, and you will get there the 78% discount on this price. Clear? So this is how you can enroll in the batch on the Adda 24/7 application. Clear? Chalo, next. Apart from that, if you haven't downloaded the application, do it now, because you will get the paid content on the application, the quizzes on the application, plus you will be finding 1% additional discount by enrolling in the application. And if you haven't subscribed the channel Offices Adda 24/7, then do subscribe the channel and press the bell icon so that all the upcoming sessions notification will be given to you. Okay, so last but not the least, do make sure you share the session with your friends on Telegram, WhatsApp group, wherever you are doing with them. And if you have any doubt, you can ask in the comment section. We are going to meet on Saturday and Sunday with a certain special session that I will be informing you tomorrow. Okay, so thank you so much for joining the session, and see you in the next class. Take care all.